Mahindra, the big question everyone is asking right now, how will the deteriorating economic climate globally impact India? Should we really be worried?
You know, since you referred to one of my tweets earlier, you may recall that a day earlier I had also said that there is a silver lining for India in all this, and which is that the downturn, the second downturn in the rest of the world bodes well for India in one respect, and that is in softening commodity prices, particularly oil. The one threat to the Indian economy, the one Achilles heel that we have is the lack of our self-sufficiency in oil. Unlike Brazil, for example, which is one of the BRICS and which thrives in circumstances when commodity prices are rising. So the fact that oil is again testing the depths of $80 and below, crude is testing those depths, actually is a very good sign for India. It makes our balance sheet look a little better. So softening commodity prices is actually good for India. And something that I had mentioned in our recent meeting with the finance minister was that rural consumption remains strong. The monsoon, in my opinion, and in the information we get from our rural finance company that we have, Mahindra Finance, tells us the monsoon and the effect on crops, in fact, has been average to positive. So this monsoon, if it continues to do the same as it's done now, I think the combination of an internal rural consumption story combined with softening commodity prices, in fact, spells good fortune for India.
It's true that Indian policymakers are trying hard to say we're better off than the rest of the world. We're looking at posting 8% growth, which is very decent and respectable. At the same time, we can't ignore the fact that we're slowing down as well.
Well, you know, to be honest, our chief economist had forecast some time ago, even before this current set of events in the US, that our economy would, the GDP would be lower than 8. In fact, she was around 7.5%. And I would say that there's a good chance that we may not reach 8, but your comments still hold true. 7.5% is still a fairly robust growth rate. And as I said, to repeat, if commodity prices soften, if the rural consumption story remains strong, India could really live up to its billing as a potential source of growth for the global economy, as an alternative engine of growth for the global economy. That might come out in sharp relief in the next 12 months.
So you clearly feel that 8% growth this fiscal is difficult, it's too ambitious, and it won't happen.
Well, I have great faith in our chief economist, and she, as I said, her target was less than 8, was 7.5, and I don't think that's bad given the circumstance. So yes, I would back her and say she's been pretty much on target in the past. So I think it would be difficult to cross 8% given the circumstances and given the slowdown in the reforms that we experienced and given the slowdown in infrastructure spending and in investment. So I would say it would be a stretch to think we could cross 8. If we did, it would be an outstanding achievement. But with that said, even a 7.5% rate would be pretty good.
NDTV's cricket app, Android and iPhone, fastest scorecard, special analysis, and much more. Download free. ndtv.com/apps.